Hello everyone, I hope you guys are doing great. My name is Serujan Kaneshalingam, mortgage broker for the past 5 years. I'm also the director of the alternative lending at Planipre. If you are listening to this, it's because you are probably a self-employed. You're at the right place. Let me explain to you how self-employed mortgages work. If you're self-employed, what are the options that you have when you're applying for a mortgage? Since I'm a mortgage broker, I have different options. I have A lending, B lending, and private lending. Let's not talk about private lending. Let's stick to the A lending and B lending for this video. If you don't qualify for A lending and B lending, then private lending can be useful. First of all, what is self-employment and who is self-employed? Self-employed is people who work for themselves. You could be a lawyer working for yourself, a notary, electrician, a lot of people in construction, beauty salon, someone who owns a beauty salon. You could be a company owner also. So those are self-employed people. You probably know because you're declaring as a self-employed. If you're self-employed, it doesn't work the same way as salaried people. Basically, if you are salaried, it's super easy to get a mortgage at the bank. All you need is a letter of employment that says you're permanent. It's been more than 3 months you've been working there, pay stubs, and that's pretty much it. Based on your income, you're able to have a mortgage. Unfortunately, if you're self-employed, it doesn't work like that. So basically, you need 2 years of declaration, and we take the average. So let's say you're declaring $50,000 today in 2020, and 2019 you declared 45, we take $47,500 as income. Right? Based on that income, based on your debts, we'll be able to see how much you qualify for. So you need to wait 2 years before you can apply for a mortgage. That's with A lenders. A lenders, who are they exactly? Is the big banks. TD, Scotia, Desjardins, CIBC, National Bank. We have also the privilege of working with virtual banks when you're working with a mortgage broker. That's something you only have access if you're working with a mortgage broker. Virtual banks are big banks. They are governed by the Canadian laws. Sometimes they have better options, better conditions, better rates also. So those are the virtual banks: First National, MCAP, Manulife, Merrick, Glenway. There's a bunch of virtual banks that I work with, and there's big banks. Okay, so all those banks, they're pretty much the same. The way they function for self-employed, it's pretty much the same. So you need 2 years of declaration, and we take the average. Also, you need to have a good credit. You have to have a low debt ratios. That's how it works with A lenders. If you don't have 2 years, unfortunately, you can't qualify. Then that's where B lending comes. Since I'm the director of the alternative lending at Planipre, or we call it in English mortgage finance, I'm also B lending specialist and private lending specialist. So I know pretty much how B lending and private lending works. If you're going with a B lender, they're more flexible on the conditions. So what are the conditions? If you go with them, basically you don't have to wait 2 years. All right, that's very cool. You don't have to wait 2 years. You could buy your first property within the next 6 months from the day you started as a self-employed. All we need is 6 months of bank statements where we can see how much you're making on average, and that's what we're gonna take. All right, let me give you an example. Let's say you're making $10,000 per month on average for the last 6 months, and your expenses are around $5,000. So you have $5,000 left, right? So on average, you're making $5,000 every month. $5,000 of average multiplied by 12 months, you're making around $60,000 of income on a year. That's your potential income. That's the number that I'm going to give to the bank. I'm going to show to the bank. $60,000, even though you just started working as a self-employed. All I need is 6 months. And what is really cool about B lenders is they are very flexible on the credit score. All right, you don't have to have a great credit score. If you have, good for you. We were able to have a good rate. If not, that's fine. We'll be able to go with a B lender as long as you're beyond 600. Compared to A lender, they are more around 680. However, even though they are more flexible on the credit score, they're more flexible on the declaration. You need to have 20% down payment. Otherwise, there's no discussion. All right, so you need to have 20% down payment. You need to have the money for the closing fees, and the rate will be a little bit higher than A lenders. All right, so that is very important. Let's go back to A lenders now. If you don't have 20% down payment, all right, you don't want to pay a higher rate. You don't want to pay any fees. A lenders, there's an option called auto declaration where we're gonna declare based on your business income, and if the company is making enough money with 10% down payment, you're able to have a mortgage. There's more information about all this program on the website down below. So for the sake of the video, I'm going to keep it short. Call me, book an appointment with me. We're going to see if you qualify right now, or we're going to put a strategy in place to make this work eventually. I'm looking forward to talk to you. Call me. I'm waiting for your call.